Gold has surged to record highs, and now the big question, is it about to crash? The price of gold has jumped a staggering 64% in 2025 alone, leaving the S&P 500 16% rise in the dust. But here's the catch. This kind of climb isn't typical, and it's got people wondering, how long can it last? Some say a crash is inevitable, but here's what most aren't saying. This rise in gold might not be as simple as it seems. In the next few minutes, I'll show you why this could be the beginning of something huge or the spark for a massive downfall. Stick around because what comes next will make you rethink everything you thought you knew about gold's future. When we dig into gold's history, things get even more interesting. The most infamous gold crash happened in 1980 after a decade of inflation, oil shocks, and a complete loss of confidence in the US dollar. Gold surged to $850 an ounce by January 1980, but then it collapsed by 65%. But here's the key point that most people miss. Gold doesn't fall just because it's too expensive. No, it falls when confidence in fiat currency is restored. And that's exactly what happened. But why? Because when the Federal Reserve stepped in and hiked interest rates to 20%, something changed. Inflation was tamed. And more importantly, confidence in the dollar was reestablished. That's when gold's role as a safe haven diminished. But notice this. That situation where gold fell wasn't just about price. It was about policy and perception. And that's what we need to understand about today. Fast forward to 2011. The global financial crisis hit, and gold surged again, reaching nearly $1,920 per ounce. But what happened next wasn't a straightforward crash. It was a slow, grinding decline. The reason? It wasn't inflation that failed to arrive. It was something bigger, the shift in narrative. Gold surged as a hedge against crisis, but inflation stayed tame despite the massive money printing. As the Federal Reserve signaled it would end emergency policies, the dollar strengthened and the markets recovered. But here's the part nobody is saying out loud. Gold didn't crash because it got too expensive. It collapsed because its role as an insurance asset was no longer needed. The confidence in the U.S. economy returned, and with that, gold lost its edge. The lesson from 2011? Gold doesn't fall because it's overvalued. It falls when the system proves it can work without it. Now let's break down the real reason behind gold's crashes, and it's not what you think. Gold's drop happens when these three things align. 1. Real interest rates turn positive and stay there. 2. The dollar enters a sustained strengthening cycle. 3. Confidence in monetary policy is restored. But here's the twist. None of these are happening today. Real interest rates, still negative. The U.S. dollar, sure, it's strong, but does it have long-term momentum and confidence in monetary policy? That's where the cracks show. Despite the Fed's interest rate hikes, inflation is still a problem. The public's trust in the currency is shaky, and that's why gold continues to rise. It's not just a price issue, it's a faith issue. And in the end, that's why gold might be more resilient today than it was in 1980 or 2011. But let's zoom out a little, because the pressure is building. And the next move is already forming. Now things are escalating quickly. While many are watching gold's price, there are a few game-changing developments happening behind the scenes that could push it to new heights or trigger a sharp correction. First, central banks are buying gold at record levels, and this is a massive shift. They're diversifying away from the U.S. dollar, creating baseline demand for gold that didn't exist in previous cycles. And then there's the U.S. government debt. In 1980, U.S. debt to GDP was around 30%. Today, it's over 120%. That makes raising interest rates above inflation nearly impossible without triggering a financial crisis. The sheer scale of debt means that policymakers can't follow the playbook from the past. And finally, there's the issue of global de-dollarization. More countries are choosing to move away from the U.S. dollar system, and that's creating an environment where gold could become an even stronger asset. So what happens if this continues? Could we be on the edge of a new gold era where its role becomes even more essential, or will we see a temporary blip before gold finds new ground? Now let's take a step back and consider the real-world impact of all this. If you're holding dollars, you're already losing purchasing power. Think about it. If inflation is running at 6 to 7% and your savings account is offering 3%, your money is effectively shrinking. But here's where it gets personal. For people who've relied on cash or bonds, this erosion of purchasing power isn't just a number on a chart, it's real pain. If you've been watching your hard-earned money lose value, you know the frustration. Gold in this environment isn't just an investment, it's a lifeline against that ongoing loss. But how long can this last? If this feels familiar, say so in the comments. How are you personally dealing with this shift, and what does it mean for you in the coming years? Because if the current trend holds, more people will turn to gold, not just as a hedge, but as a necessity. Now, let's talk about the systemic forces at play here, the real mechanisms behind why this is happening. It's not just about inflation or gold's price, it's about trust. Gold thrives when people lose confidence in currencies, and right now we're in a crisis of confidence. The US dollar is the world's reserve currency, but what happens when that trust starts to erode? The currency system is fragile, and as we see central banks diversifying their reserves into gold, it's clear the world is preparing for a potential shift. But here's the thing. This is not just speculation. It's a direct result of governments' policies. When confidence in the dollar falters, gold becomes the go-to asset, offering stability when everything else seems volatile. But here's the unsettling part. This shift is not just driven by gold's value, it's driven by fear. Fear of instability, fear of inflation, fear of systemic collapse. And that fear is exactly what's fueling the rise of gold today. It's not just about finding a safe investment, it's about securing a foothold in an uncertain future. Looking ahead, the future of gold hinges on two possible paths, and neither of them is certain. Scenario one, we could see volatility and consolidation. In this case, gold may continue to rise, but not in a straight line. Instead, it would stay within a defined range, bouncing up and down, creating uncertainty. Gold could surge again, but only to fall back, causing anxiety and indecision. Scenario two, sharp corrections within a long-term bull market. Imagine gold dropping by 15%, even 20% on a major economic shift or news event. While this would be painful, it wouldn't spell the end. It's part of the natural cycle. A correction like this could happen at any time, but it wouldn't change the fundamental direction of gold's long-term rise. Finally, there's the worst-case scenario, a bear market. This is the nightmare scenario where gold's price drops significantly and stays down. But to get there, we'd need a massive shift in policy, something that doesn't align with today's economic structure. And that's where things get complicated. So which of these paths do you think we're on? The next move might already be in motion. To wrap it all up, the real takeaway here is simple but powerful. Gold doesn't fall just because it hits new highs. It falls when trust in fiat currencies is restored. But right now, we're in a different environment. The conditions that caused gold to crash in the past, like high real interest rates, a strengthening dollar, and restored confidence in monetary policy, just aren't here today. And that's why, when we compare this moment to the crashes of 1980 or 2011, the differences aren't subtle. So while gold's rise isn't guaranteed to continue uninterrupted, it's more resilient than people realize. But keep in mind, the next move isn't written in stone. As central banks continue to pile into gold and the global monetary system becomes increasingly unstable, the question isn't whether gold will rise, but how high. If you found this insight valuable, don't forget to subscribe for continued analysis. We're just getting started with understanding what's really happening in the world of finance, and you won't want to miss what's coming next. Thank you for watching, take care, and see you in the next video.